Hello, everyone. This is Tony Lawson, CEO and co-founder of Shoppe Black. Today, I'm joined by Ezechi Britton, the founding member, principal, and CTO at Impactx Capital Partners. Ezechi, how are you doing today?
I'm very good, thank you, Tony. How are you?
I'm fine. Thanks for asking. So just, trying to get right into it, you are a venture capitalist, and Impactx Capital is a 100 million pound fund that has so far invested in 17 businesses over the tech, health, and entertainment sectors. Is that correct?
That's correct. So, we're still building our fund, let's be clear, but we are actively investing as we speak.
Great. So you personally, could you describe your journey to becoming a venture capitalist? I know you started off a little further from that, but here you are now.
Yeah, I mean, how long do we have? Normally I dedicate a whole 15-minute to 30-minute talk on my journey, but I can give you the highlights if you like. The fascinating thing with me about the journey to venture capital is that where I grew up in Southeast London, Lewisham in particular, that's not the typical career pathway for anyone of my generation growing up in that area. I went to a school where obviously we have a different education system in the UK, but our the exams, the GCSEs that we take at 16, the 5 A to C pass rate was only 14%, which, as you can imagine, is not very high. So it was a very poor performing school, an area that I grew up in. But my journey took me from there to actually doing my A-levels in a different location, then spending time at University of Kent, Canterbury, doing a computer science degree, from which I found myself doing a year internship at Lehman Brothers International, so the investment bank, in actually their prime brokerage technology team. I then rejoined them as a graduate and spent 5 years with Lehman Brothers in their fixed income derivatives, so credit derivatives, risk and pricing technology team. And I was there up until the point that Lehman's went bankrupt and went bust. I then spent a year with Lehman Brothers in administration under PwC, helping to wind down the business. I moved to Switzerland, spent 5 years over in Zurich, working for Credit Suisse in their equity derivatives risk and pricing technology team. Left there after 5 years. Fortunately, that company hadn't gone bust, but decided to make a switch back to the UK, where I joined and co-founded an organisation called Naver, which was a multi-award-winning fintech or financial wellbeing business that provided affordable loans to UK-based employees. And I was one of the co-founders and founding CTO. And that was a company which we built from scratch that partnered with over 300 organisations, raised somewhere in the region of £150 million, and lent out a significant proportion of that to UK employees, 50 million of which went to UK police officers, actually. And actually the UK police, under the guise of Police Mutual, were one of our anchor investors at the time. From there, I took a step down, although I carried on as a non-executive director for a while, but I actually left the organisation in 2017, I think it was. And I then spent a little bit of time and then ended up building my own organisation, Code Untapped, which is what we refer to as a digital skills accelerator. And that works with organisations in the UK to help them gain access to underrepresented technology talent. And we do that through running hackathons, workshops, innovation lab sessions, where we bring diverse technologists to try to solve problems with that organisation and bring innovation to bear within their product solutions, whilst at the same time giving them exposure to incredibly diverse technology talent. We're also rolling out a SaaS-based e-learning platform over the course of this year as well. So, watch that space. And whilst doing that, I also joined Impactx Capital, where I'm one of the 20 founding members. I'm a principal and I'm the CTO in residence for the fund. So that's me, that's my story. Those are the highlights. There's a lot more detail in there, but I hope that gives you some background.
No, that's a great background. And it seems like the overarching theme here is diversity, right? and representing the underrepresented or unrepresented. So could you speak a little bit on the need for Black founders to be, I guess, to have access to more capital, and I guess kind of like the environment, because obviously I'm in the US, you're in the UK. Like what have you seen are like the trends there, or have you noticed anything different between the needs?
Yeah, absolutely. And I mean, I could speak about this all day, right? So I'm going to try to, again, focus on some of the key points. So I don't think there's any doubt in our minds that Black founders need more support, right? I believe one of my colleagues referred to them as being massively over-mentored, but under-supported or under-financed. There seems to be plenty of people willing to give their time, not many people willing to give their money. And this is the issue. And I got into the space predominantly because as a co-founder at Neighbor, we're a founding CTO, an organization that raised significant amounts of money. I would be regularly giving talks around the entrepreneur's journey, what it's like to be an underrepresented founder. But I would also talk about how the barriers to entry have never been lower in order to actually create. And I don't talk, when I say barriers to entry, I'm not talking about quality. I'm talking about literal barriers, right? It's never been easier to start a company. Doesn't necessarily mean it's going to be successful, but it's never been easier to begin a company. And yet I'd be giving these talks, and the only people who look like me at these events were serving drinks and canapes. There are very few people like me in the audience who are co-founders. And that was the point where I realized, you know what, there needs to be a change here. There needs to be something that I can get involved in and utilize my skills, my network, my experience, try and make a change. And that was when I started working on Code Untapped. And that was what then led me to meeting Eric Collins, the CEO of Impactx, and then joining the team. But we talk about access to capital and finance and why this is important. And the reality is, you know, we're a VC fund. We can't solve all the problems. And there's multiple areas of challenge here. One is the follow-on funding, you know, that kind of seed, Series A. Maybe you've got some traction. Now you need to get some real money in. And actually, that tends to be the second hurdle where a lot of Black founders fall down. Historically, less than 4% of capital has gone to Black founders across Europe. And I'm pretty sure the US is a similar metric. That is appalling. Then you also look at the fact that something like only 40% of Black founders have ever received VC funding. You start to recognize the scale of the problem there. The vast majority get their funding from friends and family, and that's actually an even bigger problem.
Yeah.
Right? Because your typical friends and family round will be in the region from £20,000 to £100,000. Now, I don't know, I know you've got a fairly international audience here, but I can tell you now, trying to tell a Black boy from Peckham to go and raise 100 grand from his family is an impossibility, right? It's for most people, that's a pipe dream. So what that then leads to is either an overwhelming number of Black founders coming up with an idea and trying to get capital from VC when they shouldn't be, and then too early and they get knocked back and they don't know why. Or you get the other problem, which is founders building lifestyle businesses. When I say lifestyle, I mean businesses that will never scale to global reach, right?
Give a couple of examples of that. Sorry to cut you off.
Yeah. So a small locally focused consultancy, right? Or some, you know, lower tier, lower range beauty companies, for example, where you're targeting markets where the audience just isn't big enough, or you're solving a very niche problem that you've personally experienced. And that's the other thing. Most Black founders target have a socially responsible focus. These are businesses which can potentially scale and become global businesses, but they rarely have the appropriate guidance. Whilst they've got plenty of it, it's rarely the right guidance that takes them down a pathway where they can then get venture capital funding. So you have two big problems. You've got founders pitching to VC when they're not ready, or you have founders building companies that will never be invested in by venture capitalists. So it's a real insidious problem. And then if you start to peel back the onion around why this actually happens, and we look at that access to capital, that super early stage, as well as that follow-on, you have two problems. One is, can you gain access to that capital? Two is, do you have the confidence that you'll be able to gain access to follow-on capital later? And what you see is a marked difference between the way we say underrepresented. I like the phrase untapped personally, because underrepresented has negative connotations, right? Untapped is all about the positive.
Sure.
Okay,
Yep.
there's things that they can do which they haven't been able to, but if you can unlock that potential, there's huge upside to be had. And that's the way I like to view it. But if we look at your average founder in the UK, which is typically a white male founder who's most likely gone to your Eton colleges, Harrow, Oxford, Cambridge, and then you start to look at, well, why is there this discrepancy? Think about this. People often look at it and go, yeah, but they're well educated. They went here, they went there. There's a different part to this equation, right? Which is that if you look at your average white male founder who went to one of these colleges, his entire cohort of friends, his entire peer group will have then gone on to the likes of Cambridge, will have gone on to Oxford, potentially UCL, Imperial, right? They would have gone into banking, consultancy, law, right? After 10 years, all of these people will be senior managers on trading desks, research desks, legal firms, they'll be partners. What that person will now have after 10 years is significant access to a personal network of individuals who can provide capital, advice, sweat, as well as legal guidance and cover. And let's put it this way, all that individual had to do was go to school for 5 years. They just had to turn up. They didn't have to do anything. They just had to turn up, go to school, hang out with their buddies, and then wait 10 years. And now they can go and start a company, right? This is a serious problem. And you cannot resolve that just through access to education. You have to start building out the networks. You have to find means to provide capital to replicate or at least mitigate the damage that's being done by these social dynamics.
Sure. Would they say your network determines your net worth?
Absolutely. Social capital is a primary driver of growth in these spaces. There's an organization in the UK called Diversity VC that actually looked at the makeup of venture capitalists in the UK and in the US. And they said, you know what the number one prerequisite for you qualifying to be a VC was when they looked at the data? Take a guess.
Be white?
No.
Go to an Ivy League school?
Getting close. That your dad was a VC.
Oh.
That was the number one prerequisite that they found. Beyond that, in the UK, something like only 8% of venture capitalists have been operational, right? As in actually worked in a startup. The rest all come from either finance or strategy consulting backgrounds. And of that, only 4% have ever worked in a technology role. And then less than 1% comes from a Black background, right? So yet these are the companies that are supposedly building the technology businesses or funding the technology businesses of the future. And we start to wonder, well, why is this inherent disadvantage there? Well, the reality is the people building these funds went to school with these guys who are creating these new companies. They know them, they trust them, and they know that those people can go on and raise money elsewhere as well. So that's what reinforces this loop. It's why you need more people like us out there raising money. But then you've got to look at, where do we raise that money from?
That's what I was
about to ask. That's the whole point of the problem. Yeah, so where do we raise it? We have to raise it from LPs. We have to raise it from family offices, high net worths. And that is a challenge. There aren't enough people like us in those roles providing finance to funds like ours. And this is part of the issue. And you look at this problem and you start to say, well, why is it that only Black LPs should be funding Black funds?
And what is an LP? Sorry.
So limited partner.
Okay.
The people, the organizations that invest into VC funds like ours.
Okay.
And there needs to be a wider recognition that you don't have to be Black to invest in Black.
Sure.
Right? But that just doesn't make sense. To my mind, what are we looking for? We're looking for the missed opportunity, right? We have a phrase which is that ability is equally distributed, but opportunity isn't, right? Now, if you think about it, if ability is equally distributed, we know that it doesn't matter whether you're white, black, Asian, Chinese, smart is smart, right? It's out there. Drive is drive. It's out there, and it's out there irrespective of your background. So if that's the case, then why is only 4% of venture capital gone to black founders, or less than 4% gone to black founders?
Right.
That clearly suggests to me that there is talent there that's not being funded. What that says to me is that it's being underpriced and undervalued. So you could look at it another way. If you want to look at the brutal economics, investing in black founders is investing in an underpriced asset class, right? If you look at it from purely economic terms, it just makes sense to do it, right? Not only are you doing a social good, but you're actually finding people and organizations who've been underpriced by the market. So you're getting a great deal. Sure. Everyone else is leaving money on the table. So for me, I'm like, you know what, you keep doing what you're going to do, right? I'm actually going to take advantage of this dynamic and not only help people, but make some money doing it.
So that being said, what are, earlier you mentioned that one of the issues is founders not being ready to approach these, right? Could you speak on what a founder has to have in place in order to approach a VC and a conversation actually start, as opposed to going there unprepared or not having all the boxes checked, and then you need to go back and work on some things?
Yeah. I mean, I generally think the same goes for whether you're speaking to any investor, right? There's just general rules that you need to, well, not rules, but things you should be thinking about, right? And I'd say part of the problem is this solo entrepreneur myth, the great idea, the incredible concept that I can go out there with, pitch deck and get 10 million pounds to go and build a dream business that's going to become a unicorn. And now they'll invest in me because of the quality of my story, right?
Sure.
Does that happen? Occasionally, right? But it's far rarer than people would believe it is. And usually when that happens, it's because either that person knows them very well, or they have a very extensive network through which they can operate, or they've done it before, right? So there's a track record of raising money and executing and returning to investors.
Sure.
If you've done it 2-3 times, raising cash is not that hard. But most of these founders have never done it. So why are you pitching as if you're a serial entrepreneur when you've never done it before, right? So you need to change your strategy. The next thing is, when pitching to investors, you really need to have got something off the ground, right? Get something in place, get a product, a minimum viable product out there, be working with customers, clients. And the sad fact is that takes grind, it takes effort, and it's hard, right? It's really hard with very little resource to get a product off the ground. But that's part of what you need to do as a first-time founder, so that when you're speaking to investors, you're not talking to them about a dream or an idea. You can actually talk about, well, this is what we've done, right? This is what we've achieved. And this is why we know that this investment makes sense, because this is what the future will look like based on what we've done so far. That changes the game dramatically, right? And that's absolutely critical. I would say more than anything, get something out there, drive some traction, and actually execute before you go out there to raise money.
So VCs are more likely to invest in an idea that has traction, that's more than likely already a business, than something that's more a dream.
So a lot of VCs out there won't invest unless your business is doing over $1 million in annual revenue, right? Don't get me wrong, there are VCs out there that will happily take a gamble, but that's what they're doing. They're taking a gamble, right?
Sure.
But for the most part, the more responsible funds are really looking for significant levels of revenue. Now at Impactx, we don't look for that. We do look for proof and evidence, A, that you are generating revenue, or if you are not a revenue first organization, but that you have significant levels of engagement and traction from your audience. But what we want to be able to see is, what's that pathway to $1 million revenue?
Sure.
Because ultimately, when you're approaching a venture capital fund, there needs to be an exit pathway for that investor, right? Because they're not going to take dividends.
Yeah.
They're not taking a revenue share from your organization. Their exit is that they get to sell their shares. And that comes from either you selling your company to another company, you doing an IPO, or you providing an opportunity, usually through an overfunded future round, for those investors to do a secondary sale of their shares. Right? So you've got to really consider, what is this investor looking for in the long term, and on what time frames they have to do it. Because most funds have a 10-year time horizon within which they are legally obligated to close and return cash to their investors. So, you know, if we hear this is a 20-year plan, well, that's no good for me, right?
Right.
There needs to be some way, some growth that happens quite rapidly in there, which is why a lot of early stage entrepreneurs should really be targeting family offices or angels who are either A, looking to just take a gamble on the market, don't really mind if it's 10, 20 years before they get a return, or in the case of a family office, is really looking to protect generational wealth as opposed to create a return for their LPs, at which point their time horizons are vastly different. So they have very different expectations. Everyone wants to get a return, but through what mechanism that is and over what time horizon can be very different for them. So again, as an early stage founder, it's really about identifying what kind of business are you building, what kind of investment outcome do you think you're generating, and then having a look at, well, what's the most appropriate investor for me to be reaching out to, and what level of evidence-proof traction do I need before I go and speak to them?
Sure. No, that makes perfect sense. And that applies to businesses wherever you are across the globe.
Absolutely.
On Mars,
Absolutely.
on Jupiter.
Yeah, I would agree with that statement.
So the businesses that you have invested in through Impactx,
yeah,
what are some of the ones that stand out, and why?
It's a really good question. I mean, bear in mind, it's still early.
And I don't need to ask you to pick your favorite child here, you know.
Yeah. So yeah, no, it's still early for us. You know, we've been operating over the last 18 months, so I don't want to put too much pressure on some of these organizations. And you know, 18 months is not a long time for any deal. In fact, some of these investments are less than 12 months old. So, but I would say ones that we're particularly excited about. Should I name names? Should I not name names? Should I just
name names? You could maybe describe them, or
I'll describe them. You can always look them up on our portfolio page, right? But there's one in particular that's focused on the car insurance market, working with immigrant drivers and giving them greater access to fairer car insurance, right? And they've seen phenomenal growth over the last year or so. So we've been really pleased with the way they've performed. And they're two Black brothers, actually twins, as co-founders, which has been great to see. And they've done a fantastic job. Another company we've invested in is specializing in subscription-based mobile phones. So they're making it easier for people to gain access to high-end phones without having to lay out huge amounts of cash or subsidize expensive mobile phone tariffs, right? And whilst doing so, they've come up with some very innovative fintech solutions around how they've structured that in the back end. So that's what makes that one so interesting for me, because the actual complexity of what they've done and the way they're changing the game is phenomenal. So they're doing a great job so far. And another fantastic founder that we've got, she's in the robotic process automation space at RPA. She's working with research companies to streamline and make more remotely accessible their research process as well. So those are some key companies in our existing pipeline and our existing portfolio. And I haven't been definitive. That's just a few really interesting ones. It's not to cast any dispersions over the rest of our portfolio. So that's why I'm careful about what I say there. I don't want people to get the wrong idea. But those are some key ones that are doing some really great stuff. But across our pipeline of companies that we've met with, and these are all founders from underrepresented backgrounds, not necessarily Black. But I would say 90% are from Black backgrounds. But we've got founders in our pipeline who are building solutions for satellites. We've got some that are very much involved in the machine learning and AI space. Others are looking at robotics. Others are looking at green technology and renewable battery technology. What else have we got in there? They're obviously creative, but also health tech as well. Some looking at new forms of diagnostics, some working with leading vaccine manufacturers to help look at synthetic protein analysis, but from a machine learning and AI perspective. And so these are all astonishing founders, right, from across the spectrum.
Sure.
And it's amazing what we've actually discovered just in the last 18 months, right? Because you look at Black Lives Matter, and you look at a lot of the platitudes that are being put out there by funds today who are calling out and saying, help us find these founders. What do you mean help you find these founders? I've got like 600 of them in my pipeline. And we found in the last 18 months just by saying, this is what we do.
You're right.
Right? What do you mean help you? They're already there. You're just not listening to them. So, if you can't find them, come and work with us, right? Put money into our fund and we'll find them for you.
Exactly.
But I don't want to hear any more of this nonsense about they're not there. They absolutely are. And this is from pre-seed, seed, Series A, Series B, on a pathway to IPO. We've seen every stage, right? We've seen buyouts, M&A leveraged buyouts as well in this space. Again, Black founders. I won't name any names because those are deals that are still ongoing.
Sure.
We've seen all sorts, right? So if I always find it incredibly frustrating when I hear the pipeline.
So speaking of the pipeline, how do you fill your pipeline? Is it a mix of founders reaching out to you? Do you have your own outreach process? How does that work?
Right. So it's a combination. We have our own network of 20 founding members, as well as an ecosystem of organizations that we work with and talk to. So there's a lot of outreach and inbound through that. But also we've been doing quite a lot of publicity with organizations such as yourselves. Our founder, Eric Collins, has been in a number of interviews with CNN, Bloomberg, Reuters, Sky News, Al Jazeera, all sorts of organizations. And through that, we're seeing significant inbound interest from founders from across the world. Right now, I mean, we are predominantly focused on the UK and Europe, but we do also invest in the US. We are very focused on coming invest in Africa as well. Right. So we do look, we are pretty global, not quite over to Asia and the Far East, but we have a pretty global outlook on things. I think one of the key things that separates us from a lot of funds is that you don't need a warm intro to speak to us. Do warm intros help? Yes, of course they do, right? But we review every deal that comes through or every application that comes through into our intake. It doesn't mean that we can speak to everybody. We're only a small team. There's 4 of us, well, 5 technically, but one of us is focused purely on creative. But between the 4 of us, we then need to be able to look at, review, and meet with as many of these founders as we can. And we've got over 600 in our pipeline. So, we're limited as to what we can do. But we typically try to, if you're already at the point that you've launched and you're driving some revenue, I don't say, $1 million in revenue. If you've got some revenue, we will try and have a conversation with you. If you're not at that stage, we will send you a friendly email and say, look, you need to gain some traction and then let's have a conversation. But once you do, let's have that chat. And, we still like you to apply, even if that's going to be the outcome, because then we know about you. Yeah. You're on our list. And as we build and close our funds, it becomes easier for us to then find you. So that's important.
No, that's great. So I guess in closing or wrapping up, what advice do you have? I mean, you kind of went into what you should have prepared as a founder looking for or want to approach a VC, but what other advice or tips do you have for the person who has started a business? Maybe they've been, I won't even do any criteria. What advice do you have for someone who owns a business and wants to get some VC funding? The top, I guess your number 1 tip.
Number 1 tip is execute. Right? Focus on execution. Get to a point where your business is doing well, it's growing. You might plateau because you need that extra cash to boost it, but that's what that money should be for, right? Don't use venture capital funding or investor funding to experiment with your business. Really identify what your business is, what your growth model is, and what's the outcome that you want. And then once you've identified those things, go and find the appropriate investors to speak to.
That makes perfect sense. Okay. Well, thank you so much, Ezechi, for joining us.
No worries.
Pleasure speaking with you.
Tony, it's been a pleasure. Thank you so much.
Likewise, sir. Hopefully we'll get to talk again soon.
I'm sure we will. Okay, it's been a pleasure speaking to you and to all your audience as well. Keep doing what you're doing. I get, my biggest pleasure is to continue to find these incredible, not just underrepresented, but especially Black entrepreneurs who reach out to us. So please do reach out to us, even if it's a not yet, but let's have a conversation 6 months' time. Still reach out. Love to hear from you.
Way to reach you.
So if you go to our website, www.impactxcapital.com, you can find our intake form and you can apply there.
Okay. Thank you so much again, sir. You have a great rest of the day.
You too. It's been a pleasure. Take it easy.
You too.
All right. Bye-bye.